Now, I would like to explain the financial results for the second quarter of the fiscal year ending March 2026. As you can see, today's agenda covers three main topics. First, I would like to explain the financial highlights for the first half of this fiscal year ending March 2026. As you can see, the consolidated R Company Group reported lower sales and higher profits for the first half of the fiscal year ended March 2026. Net sales decreased mainly due to a decrease in system development projects. On the other hand, our Haruhuto business and data platform business, which we have identified as growth areas, have been steadily expanding. Operating profit increased due to an improvement in gross margin in the system outsourcing business and reductions in SG&A expenses, including rationalization of head office expenses. This is a breakdown of net sales and operating income by segment. First, in the Haruhuto business, net sales increased due to steady progress in the renewal of support services. Operating income decreased due to increased selling, general and administrative expenses associated with the resource shift to the data linkage business. In the data platform business, net sales increased due to expansion of Haruhuto Square, which is positioned as a growth driver for business shift. Although gross profit improved due to an increase in net sales, operating loss of 1.48 billion yen was recorded due to increased selling, general and administrative expenses associated with the resource shift to the data linkage business. In the contracted systems business, net sales decreased due to a decrease in system development projects. On the other hand, operating profit increased due to cost reductions associated with the resource shift to the data linkage business. This is the consolidated balance sheet. Total assets increased by 75 million yen from the end of the previous fiscal year. Factors contributing to the increase included an increase in cash and deposits. Total liabilities increased by 217 million yen from the end of the previous fiscal year. Factors contributing to the increase included an increase in advances received. Total net assets decreased by 142 million yen. Factors contributing to the decrease included an allocation to dividend resources while recording net income. Based on these results, the equity ratio decreased 0.9 percentage points to 66.3%. Next, I would like to explain the realization of management that is conscious of capital cost and stock price. We are engaged in management with a sufficient awareness of capital cost and capital profitability in order to achieve the medium to long-term enhancement of corporate value and sustainable growth required by the stock market. Our cost of equity is approximately 3% based on a provisional calculation based on CAPM, but we are aware of the ROE level of other companies in the same industry as a benchmark and aim for an ROE of 20% over the medium to long term. We are currently in a period of transformation of our business structure, and our ROE has not reached the target level because we spend expenses on product and service development, etc., but we are paying dividends to our shareholders based on DOE, which is less affected by short-term profit fluctuations. The management indicators and target values that we focus on are as stated. I will explain ROE and TSR on the next page. As for DOE, it was 10.2% compared to 10%. In addition, the equity ratio was 66.3%, which is within the target range. This is the changes in ROE. We expect 11.2% for the fiscal year ending March 2026. As explained on the previous page, we are aiming for 20% in the medium to long term as a highly profitable IT company that provides our own products and services. But we are currently investing in the development of Haruhuto Square as an investment for the future. For these reasons, ROE has remained at a low level. We will continue to work on improving profitability while continuing product development. This is a TSR benchmark comparison. The evaluation period is based on the end of the fiscal year ended March 2021. The comparison targets are approximately 300 companies in the GICS industry group. Our TSR has been below the industry average. Again, this is mainly due to the cost investment associated with the development of Haruhuto Square. which has kept EPS at a low level, and we presume that this is a factor that has lowered our stock price and TSR. We will continue to explain to our shareholders and investors that current growth investments will lead to future profit growth. Next, I would like to explain our strategy for the current fiscal year and provide an update on our ongoing efforts. Our business strategy is established around the 4 shifts shown here. Through the 4 shifts of business, technology, organization, and human resources, we are proceeding with the transformation of our business structure from a system entrustment type to an in-house product service type. As an indicator to measure our business shift, we have set a percentage of sales in the data linkage business, and we are expanding this percentage. The dark blue part of the graph you are looking at is that percentage. In the fiscal year ended March 2016, it accounted for about 1/4 of all company sales, but by the midterm of the fiscal year ended March 2026, it had expanded to 57.7%. Compared to the previous fiscal year, it also increased by 5.8 percentage points. We will continue to expand our data linkage business. Our revenue pillar is the Haruhuto business. The Haruhuto business mainly sells products such as Haruhuto and Data Spider. Flow sales shown on the screen are mainly license sales, and stock sales are sales of support services. Stock sales centered on support services were 67.1% in the midterm of the fiscal year ended March 2026, and as you can see from the transition, they continue to be at a high level. These stock sales are our stable revenue base. We will continue to aim for stable growth in the Haruhuto business. Last year, we upgraded the version of Haruhuto for the first time in 10 years and announced Haruhuto 10. On the right, you can see how Haruhuto 10 API gateway is used. Using the REST API, you can now manage multiple Haruhutos via the internet in an integrated manner. You can freely orchestrate batch and on-demand transfers according to your usage scenario. It has been over 30 years since Haruhuto was released, but we will continue to evolve to meet the needs of the times. Our growth driver in the data integration business is Haruhuto Square. The companies shown here are the cases of Haruhuto Square and Data Spider that we announced in the midterm of the fiscal year ended March 2026. For example, 7bank has adopted Haruhuto Square as their data integration platform to collect all kinds of internal data and as a means for their generative AI verification project. In addition, Saga Bank has introduced Haruhuto Square and built a mechanism to seamlessly link data among their account system, their own system, and their email sending system to customers. As you can see, the introduction is expanding mainly among enterprise companies, and we will continue to make company-wide efforts to further expand this area. This is the theme of the technology strategy announced by our CTO at the general meeting of shareholders in June. We will support both axes of AI utilization and modernization through data management, which is our strength. There will be no change to this policy. With Haruhuto Square, we provide an application function that makes data linkage scripts into easy-to-reuse packages, supporting the efficient in-house development of our customers. We have sequentially launched the AI pre-processing template series as a series of these templates. This template series pre-processes internal data to be read as RAG of generative AI. After we announced the templates, they have been covered by a great number of media, which shows the high level of attention in this field. In this way, we will focus on providing value to customers through products such as Haruhuto Square in the field of AI utilization. Here is an image of the specific flow of data processing. Using templates will save labor in processes such as data extraction and processing, embedding, and VectorDB storage. In addition, converting data into a format that is easy for AI to understand will also improve the accuracy of generated AI responses. Next, I would like to talk about modernizing legacy systems. Since standard support for SAP ERP 6.0, ECC 6.0, which is used by many enterprise companies in Japan, will end in 2027, it is imperative for many IT departments to migrate their systems and optimize operating costs. One of the measures to address this is to shift the business burden on the ERP side to functions provided by SaaS providers. With the data linkage functions of Haruhuto Square, we will play a role in loosely coupling ERP and SaaS companies. We will promote this initiative in collaboration with SaaS providers and technology partners. We have announced this initiative in collaboration with companies like the one shown here, but we will continue to expand this initiative with various SaaS providers and technology partners. The most important thing for us is human resources. These people are the source of our technical capabilities. For example, at Amazon Web Services, or AWS, their expertise and activities have been highly evaluated, and 5 of our engineers have received awards in 4 categories of the AWS Award Program. In particular, the AWS Ambassadors is a program in which about 300 people certified by AWS as having technical skills and cloud expertise are selected from all over the world. In addition to one person who has been participating since 2024, our company received the award for the first time. Our CTO also disseminates our technical initiatives through various media such as CodeZine and Digital Cross. We would appreciate it if you could take a look when you have time. This is the investment in the DNX Ventures Fund for US announced last June. We will research AI, SaaS technology from North America, proactively work on our product services, and return to our customers through our products. In addition, we have the opportunity to touch various startups. Through this activity, we will promote open innovation, strengthen technical capabilities, and develop human resources. We will also provide our knowledge to startups and actively support their growth. In this context, Saison Technology International, our US subsidiary, announced a partnership with Vectra, which provides a reliable platform in the field of agent-based RAG. Through this partnership, we will realize interactive AI solutions based on accurate, real-time corporate data. We aim to achieve a smarter and more engaging user experience, improve efficiency, and shorten the time to value creation through AI. Finally, I would like to explain an overview of the full-year earnings forecast for the fiscal year ending in March 2026. There is no change to the full-year forecast. Although profit through the first half of the fiscal year ending March 2026 exceeded expectations, this is due to the impact of the timing of sales recording in the system entrustment business, so there is no change to the full-year forecast. There is also no change to the dividend forecast. In accordance with the dividend policy, we plan to pay a total of 90 yen, consisting of 45 yen as a dividend at the end of the interim period and 45 yen as a dividend at the end of the fiscal year. That concludes my presentation. Thank you for your attention.